Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. So today is 27th of February and it was Nifty, Bank Nifty and Midcap Nifty and Fin Nifty expiry. So all the NSE indices were expiring today and it was a very unexpected day of no movement actually if you ask me. Because typically expiries are associated with very high movement and very high volatility. But today there was absolutely no movement in any of the indices, and it kind of also caught me off guard because not only there was any movement, but there was also no premium in any of the options. So it was looking very scary in the morning to sell any sorts of options today. And that also kind of caught me off guard because I was in the camp who was thinking that today might be not be such a easy day, but it turned out to be completely the opposite, and that is where market actually humbles you. And even if you might be an experienced trader, but market will always surprise you. So anyways, having said that, today was a very dull day and a very good day for option sellers, I might add. I missed out, unfortunately, and I will admit that I've got no problem in admitting it. And I think somewhere I was wanting to cushion my profits made for the month, and I did not want to take any extra risk. And the premium today that was available was too less for any option seller to make any money. But having said that, even this premium turned out to be too much because there was no movement at all in the markets. So I'll take you through how the day has been and what is in store for us as we go along one by one. So if we look at, this is the movement of Nifty on a 3 minute. So you can see after open, let's say we opened at 22,600, we are closing at 22,550. So there has hardly been any movement, just 50 points, 75 points kind of a movement that has happened in the entire day. And that is what the straddle also had opened up at. So it was like just a plain decay, nothing else. Now this is the Nifty chart for on a daily time frame. So if you see that we had broken this support and we are still trading in this small range. We have made 3 candles over here. All the 3 candles have been in a very small range. VIX has been going down in the markets and there has just been no movement. So is this are we entering a phase of low volatility till March? I don't know. Or maybe there was excessive volatility since September and that is now cooling off. I don't know. Or was it like there was too much anticipation that US is going to do a lot of things and that anticipation is now cooling off? Could be. So there could be a host of factors, but we are seeing that we are forming very small candles for the last 2-3 days. It is quite possible that we break on one particular side, like we go down and we make a huge candle, or we start going up and we start making bigger candles and the VIX starts to increase. It's quite possible, but as of now you can see this is just in a very small range for the last 3 days. Now coming to how the indices are performed. So there is a weakness which is continuing in small cap and mid cap. So you can see small cap was down minus 1.4%. VIX, as I said, is down minus 2.9. Media, there's no point talking about it. It's one of the worst performing indices. Autos is down. As I had said in my previous video, autos was flat, I think in the last trading session, but I said that flat to green means nothing because autos has corrected so much. Mid cap again is down. So you can see the small cap and mid cap are falling every day now, and even when the markets are flat, when the mainline indices are flat, these indices actually go down. Not only that, along with that, momentum indices, alpha indices, they continue to go down 1 to 2% every day. That basically shows that there is a sign of weakness in the markets which is not going off, while the ones that have been performing well are banking and financial services. And I will show you that banking, especially private banks, has been the worst performer in terms of the sector for the last 2 years. Now is the tide turning? We don't know. Possibly it could, and something doesn't remain down for a very long period of time. So it is quite possible that banks and financial services could probably lead the next run of leg of bull run whenever that happens. Or even if they don't fall and they kind of are able to generate 5-10% kind of a return over 1 year, while the other indices fall hugely, the other sectoral indices fall hugely. That itself is a relative outperformance, isn't it? So index doesn't need to really go up 20% to outperform. Even if it stays at flat or green while the other indices are going down, it constitutes an outperformance. So that is quite possible. Now coming to how the heat maps are looking, this is for Nifty 50. As you can see, Ultra Tech Cement was down minus 4.5%, and that has got relation to the news flow that happened of entry into wires and cables business, and because of that, some other name fell 18%. I'll talk about that. But in terms of the other name, Bajaj Finance was up 2.5, Bajaj Finserv 2.6, Shriram Finance plus 5.5, Trent was down minus 3. In terms of Nifty Next 50, Siemens minus 3, ABB minus 3, Havells minus 6, BHEL minus 3.7. So financials, as you can see, are all doing all right. Chola Finance plus 5, Bajaj Holding plus 3, Varun Beverages minus 6, Adani Green minus 3. So all the momentum names are now coming under a lot of pressure. And this is the Nifty 500. So you can see over here a lot of big names have lost, and there was one prominent one, which is this particular name, Polycab, minus 19% down, and that is because someone is entering into their space. And so it's all, a lot of it is news flow, a lot of it is driven by valuations. But there was actually a lot of tweet also on Twitter that if anyone had sold some put options of this particular stock, what would have happened? They would have got completely wiped out. So that is a risk that you have in selling individual stock names options. That one move like this, and this will probably be a 3 sigma 4 sigma kind of a move on a stock, can actually potentially wipe you out on one single day. So you have to be very careful of derivatives, what you are getting into, and especially overnight derivatives, you have to be very, very careful. Now I will come to these two studies I will come to. Now before that, yeah, what are the international cues looking like? So international cues are all okay except for one which I found out was this Brent crude. Now Brent crude has gone to 72.6, which is, I think, good news for us, because Brent had gone up from 69 to almost 77, 78 to a dollar. Now it is at 72. So India, being a crude net crude importer and heavily reliant on it, a $72 is a good news for India. But at the same time, our currency is not holding, so it's gone below 87 now. So that continues. Also, gold has cooled off from 2900, it's gone to 2886 now. That is also, I think, fairly decent news. There is no problem in gold cooling off, along with the US 10 years at 4.3. So international cues are looking all perfect, if you ask me. There is no problem in international cues. Now, a couple of things that I wanted to take you through. One was this report that came out in Money Control today, which says that if you can see, benchmarks fall 8 times in 30 years. So it basically talks about the kind of returns, negative returns that have been generated in which all years. So we have been having a very good run of last 8-10 years where we have not seen any year of a negative return. Now 2025 becomes that particular year. There's nothing to be alarmed about. There are times when you will get these negative returns coming in, and this is what they have shown in a very nice chart, that the big crisis that have happened, the 2008 financial crisis, it took a long time. They are saying 3 years, but they are not taking it from the peak. If you take it from the peak, it almost took 6 years to regain that earlier peak. So this was one of the worst corrections. The Nifty actually fell some 50-60%, small cap fell 80%. So this was a brutal correction, but this also lasted for a year and a half. It started in, if I'm not wrong, January of 2008, and it ended in March of 2009, something like that. So that 1 year was very, very rough. And then you have taper tantrums which were there. And I remember during this time, 11, 12, 13, no one was sure that the markets are ever going to go up. So even after 2, 3, 4 years, people were scared that whether we are able to break this previous high, whether we are going to see those kind of returns, because back to back there were two very major bear markets. One was in 2002, which was your dot-com crash and subsequent bear market, and then this particular market, bear market, came along. So Nasdaq which had made its high in 2000, was actually able to break that in 2014. So you can imagine the kind of pain that investors went through during this time. So taper tantrum was part of that. Then demonetization came, low was made, but subsequently it was taken out. 2018 there was a dip which is not mentioned over here. That was a small cap dip and ILFS crisis. 2020 we all know, COVID crash. Then there was another one over here in 2021 September to 2023 March, where the Nifty actually did nothing for that time, and that was some sort of a bear market where there was interest rate problem going on in US and inflation was there. So, and we climbed all of that, and then we made a top on September 24, and now we are down. So basically the takeaway from this chart is that bear markets will come and you have to be prepared for them, and you have to invest if you can sensibly, and then the results are there to be seen, because this all is compounding at 12%, 13% at an index level. So if you would have the appetite to withstand the losses, then you will get the gains as well. Another very interesting chart, this I found out from this is White Oak Capital. They have taken out this chart. It basically shows the kind of performance that each sector has delivered over each year. So they have the top performing sector on the top and the bottom one on the bottom. So if you see in 2024, pharma was the top performing sector with 39% returns, while private banks was down, was the worst at 0.4. Now, if you see private banks for last 2 years, 23 and 24 has been the worst performer. And if that happens, then the chances are that the subsequent years you might just get some decent returns. I'm not saying it's for sure, but it typically happens that the worst performing sectors actually go up. Now, if you look at real estate, for 2 years it's been the top performer. Will is going to repeat in the third year? I highly doubt it. So then there is, like, for example, in 2020 real estate was the worst performer, one of the worst performers. So it's a very cyclical thing. What it basically shows is that sectors which are doing well today might not do well in the next bull run, and sectors which are worst performing, for example FMCG, now look at it, this year it's been a disaster, but is it going to make a comeback next year or maybe the year after that? Quite possible, right? Because there have been years when FMCG has been the top 2 or 3 performing sectors, so it's quite possible. So basically this chart tells us that sector rotation keeps on happening in the market, and it is very important to be invested in quality names. Now where do we go from here? Markets are not looking very strong right now, and even though we managed today because it was our expiry and we didn't move too much, the way small and mid caps are falling is not giving any confidence. Can we reverse from here? Of course we can. We are due for a reversal any time now, but when will we reverse? No one knows. Are we going to fall more? Possible. So very difficult to say where we are headed, but Qs are not very great right now. International Qs are all fine. So maybe some sort of a trigger will ensure that our markets recover some lost ground from here, but still valuations are very high. Okay, and valuations are very high, especially in small caps and mid caps. Valuations are getting better in large caps. They are, I think, pretty decent in my opinion. So the key is that during such phases one should try and accumulate names which are quality, high quality. Don't fall for individual names, as I keep on saying. This is the time for your construction of your portfolios. If you are willing to take some amount of risk, then you can look at mutual funds, you can look at ETFs, indices, etc., because they don't go to zero, whereas individual stocks will always have that risk of going to zero. So as I've been saying, that I help people make their mutual fund portfolios, and I've got very good responses of people wanting to take help in building their portfolio. So if anyone is interested, please fill up the Google form. It is at the bottom of the in the description box, and I will reach out to you and we'll have a good chat, and I'll see how we can construct your portfolio as well. So because this is the time, and if you are going to buy something which is down 15, 20, 25%, then the chances are that if it's a quality index or a mutual fund, it's going to bounce back in the next bull run, and that is where you probably will be able to generate that returns, good returns, because when the market reverses and you are invested is when you actually make good returns. So yeah, so that's it from me now. Not so great day for me. I made money, but could have made so much more if I ignored the kind of premiums that were there and would have taken my trades, which I usually do. But today I actually entered, but after that there was no counter trade to take on the other side. So because the premiums are so less, so I kind of I kind of exited my trades at a profit, uh, but it could have been much better because there was no movement. But anyways, having said that, the month has been good as I've been saying, and the day was also okay. So no complaints on that. It's more important to protect capital so that you can deploy it into equities during such phases. So that's it from me now. If you like my channel, please do subscribe to it and please share it with your friends. And I shall see you tomorrow with another update. Take care. Bye bye.